guys, and thanks for joining me at the Financial Spotlight. I'm Chantrell, and I'm here to give you financial tips and tricks that are going to help you on your road to know your money. Now, I don't know what the heck has been going on with my camera. I've had this same camera since I started filming, but for some reason, it hasn't been looking right. I think it's because I moved. Maybe there's less light in this room than I usually have, or I don't know what the case is, but hopefully this resolution looks better today. Crossing fingers. But anyway, let's get down to business. So I want to talk to you guys today about 3 audit red flags. Now, you might be asking yourself, what is an audit? So an audit is when the IRS looks at your tax return. Sometimes your state does too, looks at your tax returns from previous years and decides that something is just not quite right about it. So if they decide to do that, then they are going to require you to bring maybe an enrolled agent to assist you with it. Also bring all your documentation that support your tax return and any other information that they need from you, income statements and all types of things like that. So basically, you do not want to go through an audit at all. You want to try to steer clear from it as much as possible. So I'm going to give you 3 ways that you can try to steer clear from an audit from the IRS. All right, so let's get started. The first one is to make sure that you do not have losses in more than 2 years. So net income losses mean that, when you're retorting your taxes and then you've had a loss for the first year of your business. And that's understandable. Okay, because when you first start a business, you're paying for everything. You're paying for the setup. You might be paying for computers. You might have employees. You might have a product that you have to stock, or whatever the case may be. A lot of money is going out in your first year when you're first starting your business. Second year, a lot of money could be going out too, but you should be making a little bit of money. Some money should be coming in. If it's not, then you should be reconsidering this business and trying to figure out, okay, how am I going to get income coming in that's going to exceed my expenses or my outgoing money? By that 3rd year, you should be making some type of income. And when I say that, I'm not saying that to be mean. I'm saying it because when the IRS looks at your taxes, they're going to say, well, is this a business or is this a hobby? Because if it's a hobby, then you are not able to necessarily put this on here as a business. And if it's a business, you should be making some type of income, something, even if it's just $100, something should be made for that year. So try to steer clear of being over the 2 to 3 year limit of having excessive losses on your business. The second red flag is that you are consistently having too many deductions. Now that goes hand in hand with the income being a loss. Sometimes when you have a high income with your business and then all of a sudden you are writing everything off, you got millions and millions of tax deductions, then you are making your income low, then that's a red flag. It's like, why are you constantly writing all of these things off? And I understand people want to write everything off on their taxes. They're always talking about tax deductions. I even have a tax deduction list and explanation of the tax deductions that I give out for free. You can go ahead to the link in the description box and get that today if you would like. In that tax deduction form, I give you all the tax deductions that you can take for your business as well as explain them. But I also say it is not beneficial for you to over deduct expenses if they're not necessary. Why? Because you might need to one day file for a loan, request a grant, request funding. Maybe you want an investor to invest in your business. So if these are the things that you want to do with your business, then you having losses year after year is not going to be beneficial for you, because the person that's going to try to invest in your business, or people that are going to try to loan you money, are going to want to find out, well, what's going on with your business where you're not making any money? Why would I invest in you? In addition, if you want to buy property and you want to use your business income as part of your income, or a way to get into the property or even lease property, you need some type of income to show that money is coming into this business and this business is lucrative. Now, the third one that we want to make sure we look at is that you are having an excessive amount of charity contributions. Of course, every business donates, especially towards the end of the year, because they want to make sure they get a tax write-off. That's understandable. However, if you have a large amount of charitable contributions every single year, then that is a red flag for the IRS, and they want to know, why is your company giving away so much? And especially if you're a small business and you're able to give away so much, then you might want to sign up and become a nonprofit organization. And that's a whole nother story and a whole nother entity. So I hope that these three red flags, audit red flags, have helped you. I do have a form that gives you all 8 of the red flags and explains each one of them individually. If you want to pick that up today, go ahead and click the link in the description box. That is for less than a cup of coffee. So the tax deduction form is free. You can download that today. And if you want to buy the audit red flag form, that is going for less than a cup of coffee. So go ahead and click the links, either link in my description box. If you have any questions or comments, make sure you put those in the comment section. And thank you for joining me today at the Financial Spotlight. I will talk to you another time. Bye.